Right now, the ticker for AirWA Inc., symbol YYAI, is trading at $3.06. That is down 50 cents on the day, a loss of 14.01% as of 10:49 a.m. Eastern Time, with the market very much in full swing. We are seeing it bounce just off its low of the day at $2.95 after failing to hold its open of $3.05 and hitting a high of $3.28 earlier this morning. Now, the immediate expectation when you see a stock at $3 down 14% is that it is just a rough trading day for a small cap company. But the reality of what is happening with YYAI is far more complex and frankly far more brutal. That $3.06 price is for all practical purposes an illusion. You are not looking at a $3 stock. You are looking at a 6-cent stock that has been artificially repriced. As of yesterday, October 27th, AirWA executed a 1-for-50 reverse stock split. That means for every 50 shares you held, you now hold just one. This was a move of pure desperation, done for one reason and one reason only, to get the share price back above the Nasdaq's $1 minimum bid requirement and avoid being delisted from the exchange entirely. This is the context for all the other news you might be seeing. The general belief, the one the company is pushing hard, is that YYAI is at the forefront of a financial transformation. The company, which was formerly known as Connexa Sports Technologies, has done a complete pivot. It has abandoned its old model of AI-driven matchmaking and is now, according to its press releases, a Web3 and blockchain powerhouse. You have seen the headlines. A $500 million definitive agreement with a firm called JuCoin to launch a new cryptocurrency exchange. An announcement of a $100 million confirmed investment into their new AirWA exchange, and just recently the news that they have received $30 million worth of Solana tokens to fund this exchange. The expectation they are selling is that this is a ground floor opportunity into the tokenization of real-world assets, or RWAs, which they claim is the future of finance. But the reality, as the market action shows, is that investors are not buying it. Let's look at the chart. This stock has a 52-week high of $316.50. Today, its post-split price is $3.06. That is not a correction. That is a 99% annihilation of shareholder value. The recent good news and the pivot to crypto happened during this collapse, not before it. This suggests the pivot was not a strategic move from a position of strength, but a last-ditch Hail Mary to save a sinking ship. Many investors on forums are asking the right question. With all this good news, why does the stock keep going down? The answer is that the market is telling you it does not believe the news. A $500 million agreement is not $500 million in the bank. A $30 million injection of Solana tokens is not the same as $30 million in cash. It is an injection of a volatile asset into a new unproven venture. The market cap you see, listed at $57.4 million, is what we are left with after this entire catastrophe. The trading volume today, already over 2 million shares, is heavy. But this is not an influx of new long-term believers. This is the chaotic shuffling of a post-split environment. You have algorithms repricing, you have trapped retail investors who just saw their share count divided by 50, and you have traders trying to scalp a few pennies off the volatility. The stock is swinging between $295 and $328. That is more than 10% in the first hour of trading. This is not stability. This is a clear signal of profound uncertainty. The market is trying to figure out if this company is worth $57 million or if it is still just a 6-cent stock in a $3 suit. Now, we have to talk about the short selling situation here because it is crucial. When a stock is down 99%, you might think all the shorts have covered and moved on. That is not the case. The short interest data is a bit messy because of the reverse split, but recent figures before the consolidation placed the short float anywhere from 3% as high as 12%. Why would anyone still be shorting this? Because the reverse split is, historically, one of the most bearish indicators a stock can have. It is a flashing red sign of a business in distress. The short thesis is no longer, I think this company will fall from $300. The new short thesis is, I think this company will fall from $3. Shorts are betting that this artificial price lift is temporary. They're betting that the company will use this new higher price to do what struggling companies always do after a reverse split: execute a secondary offering. They will issue millions of new shares at, say, $2.50 and dilute the existing shareholders to raise the cash they desperately need to fund this new crypto exchange. Remember, their recent financial reports showed operating expenses increasing by over 2,000%, while net income was falling. They are burning cash. The shorts are simply betting on that dilution. So what can you, as an investor, do to track this? This is the actionable part. You need to go to your broker or a financial data site and look up YYAI. Find the short interest data, but do not just look at the percentage. You must find the borrow fee rate. This tells you how much it costs for a short seller to borrow a share. If that rate is extremely high, it means the shares are scarce. Why are they scarce? Because institutional ownership is laughably low at around 2–2.5%. That means major funds, the ones who lend their shares to shorts, do not own this stock. The vast majority of the float is held by insiders, about 64%, and the retail public. This high insider ownership, especially the 22% stake held by Michael Belfiore, could be seen as a good sign, or it could mean that they are just as trapped as everyone else. What do you think? Is that high insider ownership a signal of confidence, or are they just unable to sell? Comment below with your take. The other key item to watch is the SEC filings. You must have alerts set for YYAI's Form 4 filings, which will show if insiders are buying or selling. And more importantly, watch for an 8K or an S1 filing. That will be the signal of a new share offering, and it is the exact catalyst the short sellers are waiting for. Let's be very clear about what this company is. Connexa Sports failed. Now, as AirWA, it is a tiny $57 million microcap company with a handful of employees, and it has some patents through a subsidiary called Yuanyuan Enterprise, but its entire future is now pegged to the AirWA exchange. It is trying to compete in the most competitive, most regulated, and most volatile sector on the planet, cryptocurrency and blockchain-based asset trading. It is a minnow swimming with sharks. So what is the future outlook here? What is the expectation versus the reality? The expectation, the lottery ticket bull case, is that they are not lying, that the $500 million Jucoin deal is real, that the $100 million investment is real, and that the AirWA exchange actually launches, actually tokenizes real-world assets, and starts generating hundreds of millions in revenue. If that happens, a $57 million market cap is a joke, and this stock will be a 10 or 20 bagger. That's the dream they are selling. The reality, and the far more probable scenario, is that this is the final chapter of a failing company. The reverse split bought them time, but it didn't fix the business. The deals are likely structured with so many milestones and out clauses as to be meaningless. The company will likely dilute shareholders within the next 6 months to keep the lights on, and this $3 stock will begin a slow, painful bleed back down towards the $1 delisting price. The retail investors who are just now discovering YYAI, seeing a cheap $3 stock with big crypto news, are at risk of becoming the exit liquidity for those who have been trapped since it was at 300. I see the discussions online, the confusion, the frustration. People are buying this good news and are baffled by the price drop. The market is not baffled. The market is pricing in the extreme existential risk of this venture. As an investor, you must see this for what it is. This is not an investment in a stable company. This is a pure, high-risk speculation. It is a bet that this team, which failed to make a sports tech company work, can successfully launch a global blockchain-based financial exchange with a handful of employees and a market cap that is a rounding error for its competitors. Based on this information, comment below, are you currently holding YYAI? Did you just buy in after the reverse split, or were you one of the original shareholders caught in this massive consolidation? In the end, this 14% drop today at $3.06 is not the story. The story is the 1-for-50 reverse split that is trying to paper over a 99% collapse. The expectation is a futuristic high-growth crypto business. The reality is a microcap company with a history of failure, making grandiose promises in a sector where even giants have stumbled. The reality is that this stock is fighting for its very survival on the NASDAQ.